Joining me is Chris Markowski, host of the Watchdog on Wall Street Radio, as well as president of Markowski Investments. Chris, thanks for joining this afternoon. So we snapped that three-day losing streak and saw decent gains today. What is your takeaway from today's session and whether or not maybe inflation concerns are now on the back burner?
I hope they're not on the back burner. I think we really have to pay attention to them because inflation's here. All this nonsense about it being transitory to me is just patently absurd. It kind of reminds me of Ben Bernanke telling me subprime is contained. I can see what I pay in my grocery bill. We can all see what we're paying at restaurants. Products are actually being shrunk down to size to deal with costs. So inflation's here. It's something that we're going to have to deal with. I think the market's kind of brushing it off at this point in time. And there's also some idea now that, maybe some money is going to be coming out of some of the cryptocurrencies as they came down, and maybe that's going to come back into the markets. But the reality of the situation is you can't fight the Fed, and the Fed's not planning on raising rates anytime soon. So keep on printing.
Okay, so I do want to focus on that. We did get the Fed minutes from its latest meeting on Wednesday, and I think it did actually surprise some investors, some people a little bit, because it seemed as if they are open to having conversations about adjusting their monetary policy, this unprecedented stimulus that has lifted the market and caused a disconnect for the past year between the market and Main Street. Certainly the first year of COVID, the NASDAQ rose some 70%, right? So perfectly on display right there. How long does this party last? I mean, when does the Fed change its tune? And if you are in this market, how long can you expect gains from your purview?
Interesting. I actually even think the Fed's been doing it longer than over the past year. I'm in the business of managing people's money, and it's gotten very difficult over the past few decades because I can't get any rate of return on risk-free assets. I know I'm showing my age to some degree, but if I go back to the 1990s, I could get 7% on a 10-year treasury. I mean, it's laughable now to think about where some of these rates are at this point in time. It's interesting that the Fed minutes, they're talking that maybe they'll have a conversation later on down the road. However, how do you go about raising rates? What that would do to our borrowing costs as a nation and what that would make up as far as our budget is concerned, it would be incredible. Our nation budgets over the short term, borrows over the short term and constantly rolls over that debt. If interest rates get much higher, it can get pretty ugly fast.
I do want to ask you about the economic recovery because ultimately, at some point, we might see the stock market mirror the action that we see in this economy. We did get better than expected jobless claims data on the state level this morning, but still elevated, still twice of what they would normally be during a non-pandemic time. Again, more than a year into this. I think that's the concern, that we've seen such elevation, such job losses for so long. But we've seen some Republican states decide to take the step to do away with that extra $300 a week, the federal benefit that Biden did sign as part of that $1.9 trillion COVID relief plan at the start of the year. What does that mean for the jobs economy as we head into the summer? Do you anticipate that some of these jobs, people on the sidelines for a variety of reasons, and some of them obviously extremely important reasons like childcare as to why they can't re-enter this workforce, as we go into these summer months and we see some of these states roll back that unemployment benefit, what do you anticipate that means for the jobs market?
I'm hoping people start to return back to work. We need it. Small businesses around the country are hurting. They cannot find workers. I know it's anecdotal, but I have a client base that's in 50 states, and they're all doctors, lawyers, hardware stores, contractors, whatever it may be. They cannot find workers at this point in time. And almost every day you find another story out there, some restaurant or some business that says, we just can't find workers. We're going to have to shut down. We need to get people back into the workforce. I mean, it's extraordinary. We live in a country that has over 8 million job openings at this point in time. I'm encouraged by the fact that they're going to give people a little bit of a nudge to try to get them back to work.
Let's focus to cryptocurrency. There are so many different things moving in this market right now that I want to just jump to the next one. Cryptocurrency, you mentioned it there. We've seen a big sell-off in cryptocurrencies across the board. Some reports that the Fed is going to take another step potentially toward getting to a digital dollar this summer. Does seem as if no digital dollar does hurt the U.S. standing internationally and could give rise to some gains in Bitcoin down the road. Do you see this as a temporary sell-off? Do you see real value and potentially a buying opportunity in this cryptocurrency space?
I've always looked at, and I don't even like calling it a currency, quite frankly, because currencies don't move 30, 40% over a short period of time. I mean, imagine if the dollar or the euro traded 30, 40% against one another over a short period of time, what that would do to businesses all around the globe. It's not really a currency. It's a speculative vehicle right now. I understand the concept and the fact that you're also taking a look at, what backs the U.S. dollar. It's just the full faith and credit of the United States. What's that? Yosemite? Yellowstone. So I understand that. But until the volatility comes down, it doesn't seem to me as a viable alternative by any stretch of the imagination. And it most certainly isn't a storage of value. So anybody is selling you that nonsense. It's patently absurd. It's ridiculous. However, it may work over the long term. You got to figure out which one is going to be the last one standing. You can go back to the 1990s. You can take a look at Amazon, CD Now, Pets.com, all of these retail companies. One made it. So eventually, I think something is going to come out of it. I just don't know which one.
I also want to get your take on Robinhood. I'm not sure how you feel about that platform, whether or not you interact with it. I'd like to hear about that. But also the news today that it will give retail investors access to IPO shares. So traditionally, if you are a mom and pop investor or a millennial investor trading from your iPhone, you would have to wait until the shares officially are public, trading in the primary public market to get a slice of them. Of course, if you can get in on an IPO, you can get them before they enter the public market. Is this something that you think is a good idea?
I'm not a fan of people going and gambling their money in and out, and the platform in of itself and how it goes about encouraging that type of nonsensical behavior. I'm not a fan of that at all. I mean, I know what happens. I've been doing this for a very long period of time. People end up losing a ton of money. And if you take a look at retail trading over the past month and a half, it's fallen off a cliff. Why? Because people have lost a ton. As far as giving people access to IPOs, I don't have any problem with that at all. But I do want people to understand the IPOs of today were not the IPOs in the past. The way that private equity ends up getting control of these situations for a 10-year period of time and laddering them up, you really are not getting in at the bottom. Uber was around for over 10 years before it went public. Google, not so much. Amazon, not so much. You are actually really getting in at the bottom. The way that these things are constructed, the way investment banking is being done nowadays, more often than not, you might end up becoming a greater fool and buying in at the end.
Okay, since you are a money manager, Chris, I got to get your take. What are you buying? What are you selling?
Everybody's situation is unique and different. I don't manage a hedge fund. I manage individual clients and individual portfolios. And one of the things, we'll take a sector. We'll look at tech. Tech, I'm looking at different shades of tech. I'm looking at the tech that is more sustainable. I'm not looking at the stuff. We've seen major sell-offs in a lot of these things that have been high flyers over the short period of time. I'm a big believer that earnings do matter, and you need to get them at some point in time. And that's where we're focusing our attention.
Okay, Chris Markowski, host of The Watchdog on Wall Street Radio, as well as president of Markowski Investments. Thank you for joining.